when you see the trade you want to take, have a look at where you're going to put your stop loss and put your order in where you would have put your stop loss. You'll be surprised how many times that works. So in other words, you see your trade, you see I'm going to take the trade here, you're ready to take the trade, stop. Think about it. Think where you would put your stop loss, or where a stop loss would be, or where all the stop losses would be, and move your order to that area. Whether you do it manually or automated, it's fine, but you'd be surprised how many times that's going to play out, really. So you've been wondering why every time you take that trade, it goes against you. You take a trade and it goes the other way, and you think, how the hell does that happen? Why does that happen every single time? Well, not every time, but a lot of the times. And I can kind of explain that to you. In the end of the day, it's got a lot to do, most likely, with your system. A lot of the indicators that are used by traders and day traders are lagging indicators. So you're trading too late. A big thing is obviously, get in after this has happened, or get in after that has happened, or when it breaks this or when it breaks that. And often you're getting into the trades too late. The other problem is probably, the fear of missing out. So, there's quite a lot of things, and I can give you a system that will make that a lot better for you, and an explanation as well as to how you can get around that psychologically. Because, you're probably thinking the market's after my stop loss, they know where it is, they're hunting it out, they're chasing me down, there's a conspiracy against me, the brokers trying to take my money. We've heard it all before. So, hey, it's Rob Guilty, it's logical trading. Don't forget, trading's risky. Most traders lose money. In fact, 80% to 90% of traders lose money, and you probably will too. So if you're not good at losing money, don't trade. Yeah, so what can be the cause of you losing your money every time, or, well, this going down and hitting your stop loss every time you take a trade? Well, what I do is I trade support and resistance, and I understand that the market is a 50-50. And the reason the market goes against you in many cases is because 50% of the time the market might go up, and the other 50% of the time the market might go down. And when that market goes down, that's when you start feeling that there's a conspiracy against you and it's hunting out your stop loss and whatnot. And of course, the other issue is you got into the trade too early. Fear of missing out. You saw it go up and you saw it moving and you thought, well, I'll get into that. Or like I said earlier, you wait for it to break a certain level, and you wait for the moving averages to cross, which is a lagging indicator, or you wait for the MACD, which is a lagging indicator. And by the time you get into the trade, it's already kind of halfway finished its move, or it's actually finished its move and it's starting to turn around and come back. And then obviously it will come back and take out your stop loss if you have one, which you should have. Trading is all about managing your risk. So if you're asking the question, why does it always go down? Why does the stock market always go down when I take a trade? Or why does it always go against me? And it's as simple as I said right now, and that is, you need to trade with a system that manages the risk, right? And stop waiting for things to break out. So what I do is I wait for things to get to support or a supply or demand area. I work out my risk, I work out my profits, and I take a trade understanding that the market will either go up or it will go down. There's no magic trick, there's no magic system that's going to tell you which way the market's going to go. And the reason that the market's going against you when you trade every single time, or most of the time, is because that you believe your system is perfect, and because you believe that it's going to work for you every single time. And then when it doesn't work for you, it's extremely disappointing. So once again, when you see the trade you want to take, have a look at where you're going to put your stop loss and put your order in where you would have put your stop loss. You'll be surprised how many times that works. So in other words, you see your trade, you see I'm going to take the trade here, you're ready to take the trade, stop. Think about it. Think where you would put your stop loss, or where a stop loss would be, or where all the stop losses would be, and move your order to that area. Whether you do it manually or automated, it's fine, but you'd be surprised how many times that's going to play out. If you're feeling the pain of the loss, then your risk is too high. Take the risk down a bit, trade a little bit less, and it'll probably work out a little bit better for you. Big thing to watch out for is if you're taking the stop loss, try and keep your losses as small as possible, but don't keep your stop loss too tight. What I normally do is I'll take my stop loss, I'll put it at a 1-to-1, and then it's kind of an area of it's not working out anymore. It's not so much a stop loss. So what I'll do is I'll watch the trade, and if I just feel that this trade's just not working in my favor anymore, or it's not doing what I expected it to do in the first place, then I'll just get out of the trade, or I'll maybe wait for it to try and get back as close to cost as possible and get out of it there. But I won't always wait for it to take out the stop loss. If I can see the trade has failed, or it's broken through a level where I can just see that trade's not working for me anymore, then I'll just get out of it at a small loss and move on to the next trade. I can always get back in if I need to. I can always get back in and trade again. There's absolutely no worries with that. But anyway, what are the markets doing for our next trade? Well, that's always quite interesting. Let's have a look and see, shall we? Well, the US dollar, Japanese yen looks like it might be coming into a nice short. So that might be worth a trade. Should have a look at that. The indexes still haven't retracted, still haven't come back, but they will. They will come back this week. I believe they will, most likely. The US dollar, Canadian dollar is also still a good long trade, but I think the US dollar, Japanese yen is definitely coming into play for a good short trade. So let's have a look at that, and let's see if that will work out for today and this week. But guys, nice chatting. It's been great chatting to you. It's Rob Gilty, Logical Trading. I think I'll be on my way now. Have a lacquer trading day. If you've got any questions, leave them in the comments below. Don't forget to like, comment, subscribe, or follow. And until next time, I shall chat to you again. Bye.